I don't know about you guys, but I think this gets the energy up. The StreamYard stock music to get us going to talk about banking. I'm pretty energized now. Wonderful world of banking. That's what we're going to be talking about today. Before we do that, of course, got to go through all the key items that we always do at the top of the show. Ask you guys very kindly to like, comment, and subscribe as you do all the time. It helps us out a ton. Check out the discount links in the description below for Seeking Alpha and for ShareSite. You can get a discount on their premium subscriptions for both services. They both have free versions as well. So if you want to check it out, go ahead and do that. Just be sure to use our link. Check out the Discord as well if you want to get involved with some more in-depth conversations about all sorts of different stocks and things going on in the investing world. And with that said, let me turn off this superb music that still has me really energized. I don't know about you guys. Are you ready to talk about banks today? Because this is going to be fun.
It just got real boring.
No energy. Energy just left the room.
We had to go back and forth a bit in the chat this morning when we were figuring out a topic about whether banking's exciting enough. So hopefully that got people in the mood.
I mean, you look at the stuff we talk about from week to week. Inflation, debt. I think we'll be okay. The people, they just want to know. They just want to learn things. We're very knowledgeable and very thoughtful crowd. So I think we'll be okay. And if the algorithm doesn't like it, we'll move on to the next thing.
Yeah.
So where do we start? Should we explain what banking is? Tom, I know you've been doing some deep dives into banking recently as you kind of get familiar with all the inner workings. You've read a few books at this point, if I'm not mistaken. Or maybe just one in-depth guide. I forget. What's that one called again?
Just the one. Yeah. The Bank Investor's Handbook.
The Bank Investor's Handbook. Who's that by again?
Nathan Tobick and Kenneth Yellen, I think it is.
Look at he's got both authors at
Oddball Stocks on Twitter, I believe.
Should we put up a picture of the book?
Yeah, sure.
You want to set? I don't have it ready, but
no, it is very good. I mean, I've been trying to understand banking. Obviously, all of us will have day-to-day interactions with banks, and we'll have a rough idea of what a bank does. But from an investment perspective, I really want to try and get my head around it, understand how to think about like the key factors that drive that type of business and what you'd look for in a kind of high-performing bank, and then also just how to think about valuation as well. And I know Frank's got at least one bank investment, and he's been kind of getting into that world as well. So it has been interesting to start diving into.
Tom, I'm totally new to this. What is banking? When you talk about banking, can explain it to someone who's totally new to this space? Never seen a bank or even heard of this word. What is banking?
I think someone into crypto. I think one of the interesting things about looking at banking as well is that it can get very complicated very fast, and from the outside looking in, probably seems like a little bit of a black box. And I feel like I've come out of these last couple of months of diving into it more, having a lot better understanding of, that they're not actually as much of a black box as you might initially think. Certainly some of the bigger banks probably are. There's a lot of complexities there, but some of the smaller banks, not so much. But at its core, banking is more or less kind of there to facilitate connecting people with money with people that need money, basically. So if you look at the balance sheet for a bank, it's kind of inverse to a normal company. They have assets made up of loans generally, and they have liabilities made up of deposits. And trying to understand how a bank works is really all about trying to dive into those two different aspects, understand what type of loans they're making, what kind of quality loans that they're making, what sort of interest rates are they earning on those loans, and then looking at how they're funding those loans. Is it through deposits, which are generally speaking kind of the lowest cost source of funding for a bank, or have they issued a bunch of preferred stock or something like Bank of America did to Buffett in the financial crisis just to get some capital, and that tends to be a much more expensive source of funding.
That nice 10% yield or whatever he's got.
Exactly. So those are the very basics.
So when it comes to creating loans, I know there's a lot of, we can talk about compliance in a bit, because that's obviously a big issue with banks in general, especially since the financial crisis, but even before then.
Yeah.
When they create these loans, they can kind of multiply whatever their existing deposits are, right? Like, take us kind of through like reserves and all that.
Yeah, sure. So a rough rule of thumb is probably that, and you know, each individual situation is different, but a rough rule of thumb is that a typical bank might have about 10 times kind of assets to equity. So um, they might have kind of net worth on their balance sheet of, say, $1 million in a really tiny little bank, and they could have loans up to, say, $10 million. So they tend to be businesses with a lot of leverage. That's kind of their business model. They tend to earn very low returns on assets. Like if they're earning, say, 2% returns on assets, that would be like unbelievably good for a bank. But since they're so leveraged, if they're earning that 2% on assets and they're leveraged 10 to 1, that suddenly turns into a 20% return on equity. And, for that reason, banks can be pretty good businesses, assuming that you don't do dumb stuff, basically. Since there is a lot of leverage, there is the possibility of blowing up if you make really stupid loans. It's pretty easy to wipe out basically all of your equity, even if you have, a relatively modest percentage of those loans go south.
And what about reserve requirements? Like, the governments everywhere have various requirements, or central banks, I should say, like the Federal Reserve here in the U.S. Though they dropped those after the pandemic
Yeah.
started. So, have you looked at like kind of different countries and what different reserve requirements are, and what's kind of a typical sort of balance that banks have?
Yeah, I haven't looked in a huge amount of detail, to be honest. And like you say, it's gonna move around a lot, especially between countries, and it
Yeah,
changed
fair.
a lot, as I understand it, after the financial crisis, particularly in the States. We were talking a
Mhm.
little bit before this that I went and just dug out like a Lehman Brothers annual report from 2006 or 2007 when I was first getting into the space, just try to understand, whether it really is a black box and I wouldn't have been able to find any red flags, or whether I actually might have been able to pass on that stock. I had looked at it back then. And I would back myself, fairly confidently to say I would have seen some red flags. The leverage was just unbelievable. Like I think I said, typically rule of thumb, you might be leveraged 10 to 1, and Lehman, we might want to pull up the exact numbers, but it was getting pretty close to like 30 to 1 leverage from memory. And you don't need a lot to go wrong to have what exactly happened to kind of happen
And
suddenly.
that's just publicly disclosed. Like, it could have been even worse, but even just from that,
Yeah.
crazy.
Yeah. It's crazy. Yeah.
So
So
what's
yeah,
what's to
your
stop a
point.
bank then from just creating tons and tons of loans? If, like, right now with the U.S., they removed the reserve requirement. I want to say they started to reinstitute some reserve requirements very recently. I'm not too sure on that. You might be more familiar by now, Tom. But what's to stop a bank from just making infinite loans?
Yeah, I mean, I would hope they've learned some lessons from the financial crisis that might stop them from doing it. Yeah, I can't say I'm super familiar with all of the regulatory capital requirements, but generally speaking, there is an upper limit to how leveraged they can be. And yeah, varies depending on where in the world you are.
Well, maybe now would be a good time to talk about loan repackaging and selling and all that stuff, because banks are generating fees when they create loans too, in addition to charging interest on the loan if they hold it. But in a lot of cases, they don't hold it and they sell it to someone else. They sell the loan to someone else, maybe the government, maybe a pension fund. Um, it seems like to me, just my kind of knee jerk reaction is there's probably not a lot of on balance sheet loans for a lot of banks. A lot of them get sold to something like the Federal Reserve or somewhere else, or pension funds. Um, do you see in your research thus far, have you seen a lot of banks that hold um, their own loans on their own balance sheet? I know we've talked about Hingham Institute for Savings, right? That seems to be one of the kind of the rare rare examples of a smaller bank holding its own loans. What's your kind of take on that?
Yeah,
I
that's
think
an
those would be investment banks, right? I mean, you're talking about securitization. So traditional banking, investment banking would be very different.
No,
So
not necessarily. Even with say, for example, a mortgage company will, or a bank that has a mortgage arm will create a mortgage lending to. Oh, we'll just say Bank of America. Bank of America makes a mortgage for someone. They will then, and they'll do that 100 times. They will then sell a package of those mortgages to, say, Fannie Mae or some government company, quasi company, or even the central bank. And they no longer have those loans in their balance sheet. But that's a bank making a loan. That's kind of what I'm getting at. Separate from investment banking, which might actually buy those mortgages on the other end. But that's what I'm getting at.
I think you're starting to move into the territory of why banking is a hard industry. Is there's so many moving parts,
Yeah.
even in just the loans portfolio. There's so many different things a bank can do with that, which is why 99.9% of banks I'd be passing on pretty quickly, just because they're doing so many different things and they're hard to understand. There's only a select few banks that would interest me, and it's because they keep things very simple. So you mentioned Hingham's and them keeping their loan book very simple. It is all their own loans. They're pretty easy to understand. They don't do too much else. They pretty much just have commercial real estate. That's most of their portfolio. A bit of other real estate loans on top of that. And you don't really need to think about their deposits too much because it's a very small aspect of their business. So
Sure.
when you're talking to Bank of America, Citibank, or anything else, they're getting very complicated at that point. They're doing so many different things. And I think to understand that, you need to spend a lifetime in the industry.
Yeah, I tend to agree. I think if you look at like Hingham's a nice example because they basically only make real estate loans. They have residential and commercial real estate loans as the only lending they do. It's kind of like a joke they put up almost in their investor presentations and in their conference calls. They have like slide one is like this Buffett quote of banking's a really good business if you don't do dumb stuff. Slide two is what we do, and it has like 3 points on it. And then slide 3 is what we don't do, and it has like a boatload of bullet points on it of like we don't have credit cards, we don't make a meaningful proportion or maybe any of their revenue from like fees on accounts. They don't do like car loans. They don't do all sorts of different stuff. So if you can stick to those types of banks, not to say Hingham specifically, but if you can stick to those smaller regional banks, they can be much simpler to understand.
And just to name another few, I guess, not to just plug Hingham too much, there's banks like Pinnacle or Bank of Oklahoma who also keep their operations very simple. So I guess if you're getting started, there's some names to, I guess, try and understand what they do before you try to understand what something much bigger is doing.
What do they primarily focus on? Is it just real estate loans or any sort of niche?
Hingham's is just commercial real estate, pretty much.
Mm-hmm.
The other two
is also another one, right? That has come up quite often. I think Phil Townsend invested, or is he out?
I hear a lot about it, but I've never looked into it.
A Bank of the Ozarks, you mean?
Yeah. That's his biggest position, I think.
Still,
and I think so. Might have to check
cash
that,
was.
but
cash for options.
Gold. You forgot gold and silver. Yeah.
If you include that in the cash pile, definitely.
Yeah. Well, I think that's his biggest stock position. We'll put it that way. And they definitely have a large real estate component, although I think they are often lending on development projects as opposed to like established properties fully leased out, which Hingham do a little bit of that as well, but they're probably a little or potentially a lot more risk averse, I would say, in their loan underwriting.
Well, what are some of the other loan options out there? That because let's kind of walk through some of the products a bank could offer. We mentioned mortgages with real estate. Tom, you mentioned credit cards being another potential thing. Just listing off potential loans, personal loans.
There's a bank like Ally that focuses exclusively, not exclusively, but pretty much auto loans only.
Auto loans. Yep.
So Yeah, each bank focus on different ones, and then the ones that include all types of loans is where it's just like impossible.
And then on top of that, they're offering other products to investing services and options on their debt load and buying securities. And the balance sheet gets extremely complicated very quickly. That's just on the balance sheet side before you even talk about revenue generation and all that.
Yeah, and it seems like, or it almost certainly is the type of business where management is like extremely important. And if you start looking at some of those bigger banks, you're not often, I guess, in absolute dollar terms, you'll find managers that have big investments, but in terms of like percentage ownership of the company, you'll struggle to find that with like Goldman Sachs or Bank of America or Citi or that type of thing. Whereas you can find that in some smaller regional banks.
I think it's because a lot of those huge banks are so old that a lot of them are well over 100 years old. You're not going to have any like founders, for example. You might have, I was going to say you might have some like family, but even then, like it's all been split up a million times with each decade that passes. Some of these banks go way back in the 1800s. So at least for the U.S. mega banks.
We should probably distinguish between like financial institutions and banks. So,
well, they're often quite intermixed. I think that's why we can't.
But like in 2008, a lot of the financial institutions got converted to bank holding companies, right? So, what exactly changed? Maybe we could get into that.
Doesn't that really just change kind of compliance and some of the things they can do? I think that's the main change, right?
Yeah, that they can actually accept loans and that they're backed by the Federal Reserve. That's the primary difference. When you're a bank holding company, you're backed by the Reserve. And if you're not, then, well, best of luck. So,
yeah.
There's some other interesting things there when you have a bank holding company and when you don't. Like I believe Hingham actually lacks a bank holding company, which is quite unusual. There's some interesting things there. Like I believe when you do have a bank holding company, you can sort of funnel profits up to the holding company to make distributions like dividends and share buybacks. And there's a lot more kind of process you need to go through when you don't have a bank holding company. But there's quite a few other different setups that are possible. I believe having a bank holding company is the most common. And I'd need to refresh my memory, but if you look through the Bank Investors Handbook, I think there's at least 5 or so different kind of setups that banks can have, and there's interesting quirks and pros and cons to each.
This is just in general. Since we're talking about compliance, I know that's a huge budget item for certainly the big banks, but small banks as well, and that's why you see so few small banks, the industry has been heavily consolidated over the last really 100 years, but definitely over the last 30 or 40. So like with Hingham, for example, do we know how much of their budget goes just towards compliance, even with a relatively, we'll call it tight balance sheet of just going through, real estate loans? Because I bet it's a pretty significant portion. You don't have the economies of scale that something like a JP Morgan Chase would have, where even though you're spending a skadillion dollars on compliance, it's small relative to your revenue. Like how do we have any idea what kind of compliance budget they have?
Yeah, I don't know the answer to that question specifically, but I guess talking about expenses more generally a little bit. I mean, banks, they don't probably often get categorized this way as much as they should, but banks are just commodity companies. Like $1 from Bank A spends the same as $1 from Bank B, and just like
cash as a commodity, yeah, sure.
Yeah, and just like any other commodity company, it tends to be the low cost producer that has the greatest advantages. So, you can look at those types of metrics. Like if you were to pull up a Hingham presentation, for example, you'll see sort of the trend of their costs kind of steadily going down over time. So don't know the answer to your question specifically, though.
Yeah, I'm looking at Ticker right now.
For lawyer fees, that's what he's interested in.
No, I'm not on the I do some financing, but not for the bank itself. I've done a little bit of lending work for mortgages, but nothing on the compliance side. That's a whole different animal.
Yeah.
And banks will have in-house teams for all that because you're just dealing with it all day. What
I
you
mean,
can and
clearly
can't
it's an
do.
attractive sector, though. Like, I mean, if you see companies like Square, they're getting the banking permits and everything. So there's probably a reason that the traditional finance space is being, you have new entrants coming in. So, but I'm not sure what kind of bank license does Square have. So, do you guys know about that? Have you
That's a
looked
good
into it?
question because there's only so much you can do. It just shows you how, but that really goes to how hard competition really is in this. Because just to even like start, you got to pour millions of dollars into lawyer fees and other things to just get the compliance up and running, which is kind of crazy. Which is not the case in many industries, most industries probably, where it's just intense compliance, which maybe, in the inefficiencies, there are opportunities and that can give existing players a huge leg up. I don't know what your guys' perspective is on that, but it's kind of like it's a double-edged sword. It's horrible in some ways and great in others from like an investor's perspective.
Yeah. Yeah, I don't have much to add on that one.
Yeah, those
All
with
right, I
like
nailed
niche
it.
understanding will benefit, like I think with any industry. So,
Fair. Yeah.
Yeah.
I mean, like I think Buffett's had like a perfect track record when you look at his banking investments, right? So,
Maybe we should talk about Buffett
Pretty
now,
much.
as he's been buying
Yeah.
Citi.
Yeah, it'd be interesting to talk about City, I think.
And what was he selling? He was selling off Wells Fargo and wasn't there something else? Another bank? Over the
US
last,
Bancorp, is it?
yeah, U.S. Bank as well over the last year.
And I think Bank of America is like a second or third position, right?
Yeah,
Base
that's
position.
from the
I
nice
think
preferred
Lilu is in
shares he
it
got.
too, right? Lilu's in Bank of America too, I think.
Correct,
As far as I
yeah.
remember.
And DJ Co from the financial crisis.
And Charlie, yes, Charlie Munger, yeah.
Guy Spear?
Yes.
Guy Spear too. I wonder what's kept Monish like away from the banking. I know he was in like Silicon Valley
Blow-ups.
Bank, but then right.
I mean, he
It's
blew
not a
up with
10x.
Delta Financial, right? Is that what it was called? Delta Financial?
Yeah, but that's the financial institution. So that was mortgage.
Yeah, I don't know
Mortgages.
exactly what they were doing. Yeah, I think it's a weird industry because I think the guy, I'm blanking on his name, sorry, Frank, but the guy you interviewed for a Twitter thread a little while back sort of described banking as a nice get rich slow type industry, and that maybe deters a few people because it is quite boring. But banks tend to have a higher return on equity than the typical American business, and they tend to trade at a lower valuation than the typical American business. So it is a nice hunting ground, assuming that you're not like restricting yourselves to things that must be 5 baggers in the next 2 years and that sort of thing.
So Sam Haskell is his name. He runs,
Yeah.
I think, Calerion. I don't know if I'm pronouncing that right. Is a fund, and he focuses exclusively on banks. And yeah, I kind of asked him that question, and he said it's a kind of a cheat code because there's 800 banks roughly that you have to understand. And if you know the industry well enough, you can pick out those companies that return around 10% or a little bit more. And if you're looking at the S&P 500 long term, say 8%. So it's just that slight bit of outperformance and get rich slow. And you only have to understand a very tiny portion of companies compared to what you would if you were investing in the 70-odd thousand public companies worldwide. So, and I guess in that 800, he would be passing on a lot very quickly just because he has that understanding. So,
Yep. Should we take a look at Citigroup, since that's the bank Buffett's been buying most recently?
Sure.
Jack, just to steer you in the right direction, I do find QuickFS actually really good for getting some basic stats on banks. If you maybe want to pull Citigroup up on QuickFS, if possible, that kind of tells a little bit of the story.
One moment.
Thanks.
What's
I'm free
Citi's
in the
ticker?
comments
Is it
that
just
just a C,
Just-
I think.
yeah, it is.
I'm just looking in the comments. Someone said that Buffett, well, I guess Berkshire, are also buying Ally Bank, which certainly wouldn't be Buffett, I don't think. It would be Ted or Todd, I'm assuming, but I didn't know that was happening either.
So here's Citi.
Yeah, so if you want to just zoom right in on the key stats section, that kind of tells the story here. So, like I was talking about earlier, return on assets in banks tends to be very low. Even by banking standards, this is pretty low for Citi at 0.8%. And under capital structure, their assets to equity of 9.4. So that's kind of how leveraged they are on those assets, obviously. So that gets them up to a return on equity of 6.8%, which is pretty anemic. But when you compare that to the price to book, and with most banks, that will be basically equivalent to the price to tangible book as well. There's typically not a lot of intangibles on a bank balance sheet, but you'd have to check that with Citi. They're trading at 0.5 times book. 0.5 times book. So you can effectively double that return on equity of 6.8% and get closer to 13, 14% kind of expected returns. So it looks pretty cheap on that front. The kind of underlying performance of the business isn't great. Maybe Buffett thinks it'll get better, and maybe he thinks even if it kind of stays constant, he might do okay too.
How do we
On the
factor
net
in
interest-
inflation and interest rates in general into all of this? Because that's obviously a big concern for investors now. And if you're a lender and maybe your loans are fixed for some period of time, you can't raise interest rates even as inflation rises. And if inflation's high, well, that means your customers are paying you back with lesser dollars. So is that like an overly an outsized risk, we'll say, compared to maybe some other businesses because of their interest rate risk?
We would see that in the net interest margin, right? I mean, isn't that right, Tom?
Yeah, you would.
Like
So
how
there's two.
efficiently they're able to get the money in and loan it out.
Yeah, so there's a couple of things there. So the net interest margin is basically very simplified right down as like the difference between what they're earning on their loans versus what they're paying to depositors. So that would tend to be fairly constant even at higher interest rates. It may even get wider slightly at higher interest rates. People don't tend to get as caught up with a slightly wider net interest margin when the absolute interest rates are higher. So potentially they could expand that out and increase their return on equity.
So just to clarify, as inflation and interest rates are rising, they're still keeping that margin. Everything just kind of trails it in a way. Does that make sense?
Yeah, or the margin may even get wider. So like
Sure.
in this example, if they're paying depositors 1%, then they are lending money out at 4.5 to get a net interest margin of 3.5.
Mhm.
Whereas if they're paying depositors 5%, maybe they can lend at 10 or 11% and people are still okay with that, if that makes sense.
Yeah. It's like leveraged in that way.
Yeah. So that's part of the equation. The other thing you're right though, Jake. You'd have to dig into what the loan profile looks like and how long dated some of those loans are. And same thing on deposits. You'd have to look into what those sources of funding kind of look like. If it's all very short-term deposits and you have to start paying higher interest on that very quickly, and then you've got long-term loans that don't roll into higher interest rates for a while, that can bite. So you'd want to understand what that sort of looks like. But all businesses are negatively impacted by inflation if they can't increase their return on equity, though.
Yeah.
Yeah.
Should we compare Citi to like Wells Fargo so we can like get an idea as to why Buffett is probably selling Wells and buying Citi?
Well, let's do Bank OZK. That's kind of interesting. The little Phil Town bank.
Let's do both. Let's do Wells first. I'm curious too.
There we go.
There's Wells Fargo.
Yeah, so much healthier return on assets, return on equity, but it's trading closer to book value.
Yeah. Interesting.
Yeah.
I'll do it.
Yeah.
You have about the same net interest margin, very similar
Yes.
trend too.
Yeah, which would tell you that Citi probably has higher just operating costs if they've got a similar net interest margin, but their return on assets is lower.
The return on
So-
equity is like double, isn't it? Almost.
Yeah, what was the return on assets at?
Around
Here's City.
6.8
Yeah.
and 11.3 over there.
Yeah, well, that's influenced by the leverage, though. I would pay more attention to the return on assets to compare like the quality of the business, if that makes any
Okay.
sense. But still, reasonable difference.
Because with this almost a similar net interest margin, they've got higher, like significantly higher price to book, significantly higher return on equity, but the return on assets is where the difference is.
Eunice here says that some Turkish banks trade around 0.25 price to book.
Dang.
A lot of
But you have
currency
to wonder the
fluctuation
quality of
going
the
on there.
deposits.
Yeah, which makes sense. Like if the return on equity of the bank is 10 or 15% in Turkey when inflation's like 50%, then they deserve to trade at a low price to book. As with any business, but it's kind of more obvious in banks.
What is Bank of the Ozarks ticker?
OZK.
No B. Yeah.
Just touching on those Turkish banks as well, I think it's important to think of a bank as a commodity business that it really is. Like the value of that dollar or lira or whatever it is in Turkey is important to their operation. So it's cheap for a reason, I guess.
And when you talk about tangible books, so like what sort of tangible assets do you talk about? Like, is it assets that the bank controls, or is that different for each bank? Do you guys know?
Yeah, I guess so. Like the all I was saying before is the book value is basically the same as tangible book value in a bank generally. They don't often have like intangible brand assets or goodwill oftentimes. If that makes any sense.
Yeah. There was a bank that I was looking at like a while back, I think 2 years back. It was called UniCredit, Italian bank. I very quickly understood, it's just going to go over my head. But they had a lot of assets like art and all sorts of stuff. And I'm like, okay, how is this relevant to a
Weird.
bank?
Sounds
Yeah,
more like
okay.
a fund.
Yeah, that's interesting. I mean, like there will be other assets in there that contribute to that tangible book value. Like Hingham has an equity portfolio, for example, that I'd have to recheck the numbers, but it might make up ballpark like 20% of their book value, something like that. Yeah. Did we have Banco ZK there?
Yes.
What do we got?
One price to book.
Yeah. So this is a really interesting one because the return on assets is greater, the net interest margin is greater.
Yeah, and significantly greater than net interest.
But the return on equity is only slightly greater.
Yeah.
And this is one of the interesting things. So obviously we've seen very famous examples, 14 years ago or something now, of a bunch of bank blow-ups that tend to concern people. And this is a really interesting example where Bank of the Ozarks, to my knowledge, tend to probably make riskier loans than the typical bank because they're often construction loans and that type of thing. So they have a higher net interest margin, they have a higher return on equity, but they haven't leveraged themselves anywhere near as much as the other banks. They've got assets to equity of 6.5 versus, I don't know what it was on the other ones, close to 10, I think, from memory. So there's sort of two ways to look at risk here. There's looking at the actual loans and the deposits and understanding what the makeup there is, but then there's the leverage component too. So more leverage doesn't necessarily mean more risk. Less leverage doesn't necessarily mean less risk, because you could have less leverage but really risky loans, or vice versa. Like Hingham is probably a good example of the exact opposite to Bank OZK, where they have like laughably small loans go south but they tend to use a little more leverage. They might be 11 or 12 times assets to equity from memory.
The loans to deposit, it's quite significant, I think, even compared to the other banks that we were looking at. Almost 90% on average, 92%.
And compare that to the others. Yeah, wow, significantly higher.
Yeah.
This is
Immediately, that's what stands out.
And then Citi, even lower. Yeah. Interesting.
Yeah, and if you were to look at Hingham, I think the loan to deposits is like north of 100% because they've got
About
other sources of
110%,
funding.
I think.
Yeah, they've got sources of funding that aren't just bank deposits. I forget exactly. It's like I forget exactly what that little reserve bank's called that they, or whatever it is that they.
It's some home equity thing, right? That you'd mentioned. Some home equity.
Yeah,
I can't remember.
Which is a source of funding for, I think, 10 or 15 little regional banks in the States. Yeah, I'd have to.
So is that
refresh my
like the Fed of
that
the regional banks?
I guess so. Yeah, I don't know, Frank. Do you know a little more about that or not? Not really.
Not really.
We've got a super chat.
Super chat.
This one's for you, Tom. Thank you, Heplamage.
Get Tom's thoughts on Heartland Bank. Is Heartland
Is it
Bank
regional?
public? Yeah, Heartland is a little bank in New Zealand.
He must be paying us out of his Heartland bank account. Those New Zealand dollars.
Yeah, exactly. It looks like they possibly are a public company. Interesting. Yeah, I don't have a whole lot to say about that. Maybe we pull them up on QuickFS. It looks like the ticker symbol's HGH. Should have New Zealand stocks on QuickFS, I think.
They have Australian, so maybe.
All right, here they are.
What do we got?
All right, Tom, from the hip. What do you got?
What's with that net interest margin? What's happening there?
Whoa, yeah, that's
Tell us
weird.
everything we need to know about Heartland Bank right here. You have 30 seconds.
Yeah, something weird's happening with the numbers, I think, on that interest margin. I don't know, unless this is some payday lender, but I don't. They're not a payday lender as far as I know. Seems kind of expensive on price to book. Returns on assets and equity look decent. That's a hot take. I don't have too much to say.
We'd have to look into what is the source of funding? What are the deposits like? Who are they lending to?
And what's going on here? Yeah. The net interest margin of 40%.
Weird.
It seems like an outlier on the scale.
Maybe it is a payday lender of some sort. Or they do
they're not. Yeah, okay. So savings and deposits, home loans, business loans, car loans, rural loans. It seems like a pretty traditional lender for New Zealand.
Then where's this margin coming from? This is why.
I think the numbers are.
The numbers might be weird. Maybe maybe we're a decimal point off. I don't know.
That would make some sense.
Yeah.
Some weird conversion thing, maybe? That sounds weird.
Yeah, I'm not sure what that's about.
Well,
good question though. That's one for me to look at. I didn't even realize they were public.
Heartland Bank.
What was the market cap? How
in the backyard?
Did you have it there, Jack?
What's that?
What was their market cap? How big or small were they?
Market cap of what is that? 4 billion.
That's New Zealand dollars, is it?
No, U.S. dollars.
Okay.
There you go.
Interesting. There's this question from the Art of Value about HDFC Bank. It's been a name I've seen pop up quite often in a lot of people's portfolios. It's an Indian bank, Housing Development and Finance Corporation, I think it's called.
I think this is just a really quick take from me. As soon as I hear bank in India, I'm passing. It's hard enough to understand a bank, let alone a bank in a country that you don't understand their economy and how everything works. So,
but I think it's been one that's been significantly growing, and I think that's why the price to book is
And price earnings is very high.
6 times
Yeah.
of what
Be-
we were looking
looks like
at
a
with
beast,
Citi.
but expensive.
Yes.
Yeah, it's the odd bank that's growing very fast, but
Yeah.
Growth bank is not like it's not something you think of very often or hear very often in this environment. Usually see
I mean,
you.
yeah, but
I was thinking of
got
as like
tailwinds.
slow, steady, lumbering in many cases.
You've got tailwinds, so like obviously that's why there's growth and could possibly have a very long runway.
Sure.
So
Yeah, as things mature.
haven't looked into it, but
just a
Yeah,
lot
it's
to
a-
understand, I think, if you're moving into a developing country like that. I don't know. That's just an easy pass for me, but that's
Yeah,
from a lack of understanding.
Yeah.
it's the compliance thing again. It's hard enough to figure out one country's compliance and different risks and everything behind the scenes with banking in particular. You can say that about a lot of industries, but especially banking.
Yep.
Going back up to some of the earlier questions, we had quite a few. And I think I remember seeing Eunice. Maybe we
How
can
many
break
peop-
up the. James has a question here. Not related to banking. Maybe we could take a banking intermission before we get back into it. What is your largest stock holding, and what is one thing you like about it, and what's one thing you don't like about it?
who wants to go first?
I need to double check real quick. But
Yeah. Same. I've got a couple that are neck and neck.
yeah, same here.
I won't name the stock, but most people know my largest holding by this point. I like the management. And one thing I don't like, the over promotional aspect by the management. That might
You
be
just-
contradicting myself there.
I wonder what's the company called. I can't remember. I wonder if any of the partners can help.
Yeah. Isn't it something about jelly from memory? I don't
Yeah, jelly, right?
Looks like Pershing Square Holdings is my largest. Followed very closely by Equity Commonwealth. Interestingly, only a few $100 off.
You're staying steady. I like that.
Yeah, that's kind of been like my cash allocation for the past like year or 2 years almost at this point has been Equity Commonwealth. About to see my one thing I like about it, Bill
This is
Ackman.
difficult.
One thing I
So
don't like
what's
about
one
it,
thing
Bill
you
Ackman.
like about that?
Yeah. You've got the same comments as Frank.
Yeah, basically. And to get a little more precise, I like the general balance of the portfolio, although it is heavily skewed towards like fast food restaurants, and Domino's I know just got kind of slapped in the recent numbers. But it's pretty concentrated. I like Bill Ackman's thinking and approach most of the time. If you can look past many of his unnecessary controversies, then I like the general concepts and sort of philosophy he follows. So, yeah, I'll leave it at that. Yeah, granted, he does some weird moves sometimes and says a lot of things he probably shouldn't that get him in hot water for frankly no
Unfold
reason.
conviction.
Yeah, I guess so. So yeah.
I wonder if he'll give an update as to how he's thinking about Netflix. Like, is he interested? Is it?
Yeah,
I
they
don't think
posted
we'll get
another. Didn't they? I think they just posted their earnings and they lost more subscribers.
Yeah.
As they predicted.
Yeah.
I think
They
weren't
lost
they
less
up?
than
They
they
were up on
predicted.
earnings though because they lost less than expected or something.
Yeah. They predicted 2 million lost. That was their guidance, and they lost 970,000.
You know why they're losing subscribers? Because Discovery is getting them.
Or any of them.
Discovery and Disney are like eating Netflix alive.
They're kind of eating each other, really.
I know, and that's also my largest stock holding. And one thing I like about it is the competition. I like the competition a lot. It's fantastic. Yeah, and I think the low-cost provider wins, and that's what I like about Warner Bros. Discovery. So, what's
Does
one
the
thing I
best
don't like
quality
about it?
content not win?
Um, when there's so much competition, I think when it comes to an oligopoly, um, eventually, not really, because the content that a lot of people watch is legacy content. Investment in new content is being done, but what's the return going to be like? Who knows? So, at least for now, for the next, say, 2 years, I think people with legacy content, people with large libraries are going to be the dominant players as there's a lot more consolidation in the industry. Once that's
What I'm
done, then let's see. Yeah.
what I'm hearing is that you're like a really big fan of Friends and The Office.
I like The Office, yeah.
That legacy content.
But that's NBC, so I mean, that's
Okay.
They do have a pretty massive library, so I get what you're saying there. I think that's a pretty fair take.
when
I
there's
think is that the
consolidation.
most we've heard
yeah.
from Quran about
That's it.
Discovery? The most like concrete comment on it? I think so. I
Is
like
it?
it.
Have I shared too much already?
Yeah, it's gone way further than normal.
I thought it was Deadliest Catch Quran was into.
Shark Week. Shark Week is where it's at. Yeah.
Shark Week every week. Shark Week.
Yeah.
All right. Tom?
Oh yeah. So just by a whisker, my largest position is now Seritage again. It's
Oh,
returned
wow.
to
The
the
market
top.
helping you out a bit for once
yeah.
on Heritage.
Yeah.
Very
So
good.
I think the like and dislikes probably reasonably straightforward on this one. I like the net asset value, or at least what I think it is. I dislike. What do I dislike?
The clock.
Benjamin Shaw.
Yeah, he's not an issue anymore. The cash burn hurts, but
You just like time. Heritage. I
um,
just like time moving forward.
yeah, I mean the facts have changed a little bit, or at least the strategy's changed.
Mhm.
So yeah, right now the biggest threat is just time, I would say.
Tom, would you trim the position to add to something that might come up, that seems attractive in the next month, 2 months?
Yeah, I don't. Yeah, I've got cash to do stuff if I want to buy things at the moment. Yeah, if prices change dramatically or if I was fully invested, the equation would be different though.
All right. Good deal. Thank you, James. Good question. Back to banks.
And I guess if there's any other questions people have, feel free to put them in. I'm running out of bank talk, but I don't know about you
I think we've
guys.
done a
That's the
decent
question for
overview,
you
haven't
here.
we?
I mean, we gotta hit a view this one here. Ryan, go ahead. What were you gonna say?
Oh, there's a question for you here. EQC. Like, what's keeping EQC in the portfolio?
Part of me kind of likes, since I don't have any well, I mean I do, but I don't have a lot of cash outside of the portfolio. It's sort of like my cash in the portfolio, if that makes sense, because it's just like a cash pile. And I obviously like Samzel, and we're getting into stagflation in the stagflationary environment, which he built his whole career on. So I kind of like some of the risk reward there, and that downside is quite low, other than inflation, which maybe isn't that low. And you do have some inflation protection with the actual properties they have in the portfolio already, but it's not that much compared to the cash pile.
It's been 2 years that they've been looking for
about a year
deal.
and a half, I think, since I've had. I'm not sure exactly, but probably about a year and a half, approaching 2 years. So yeah, I'm just gonna let it there. I made like a kind of a big initial bet, put a little bit in. I trimmed actually a bit a few months ago, and I just kind of left it at that. Right now, it's about what percent of the portfolio? It's
You borrowed
around,
against it, right, in your M1 finance?
It's around 12% of the taxable portfolio. And what was that?
You borrowed against it, right? In the
The whole
M1.
against the whole portfolio. Yeah, so that's another reason I kind of like having a little bit of cash, kind of as a backbone, just because I'd have leverage to pay for the down payment and some of the closing fees for the Houston house, but that'll get paid back over the next few months.
Eunice just has a comment. Is he got like a direct line with Monish or something?
No, there was a regulatory filing came out. Someone messaged me about it yesterday, actually.
Okay.
So yeah,
Can we pull that up on the
Monish
ticker?
turkey stock.
I kind of want to hit this one he asked pretty early in the show, though. Is it
Yeah,
a good kind of general question? We can get to Monish. Sorry to grab the wheel. But how do you judge the credit risk of a bank without really knowing who their borrowers are? Do you look at a lending history, past default rate? It's a good question. Is there a
It's
method to
NPLs,
that?
right? You look at the NPLs, isn't it? That's the
Yeah.
non-performing loans.
Yeah, there's a lot of stuff you can look at. That's one of them. I think history is probably the best tell here, assuming that they're, assuming you're looking at history and in future the bank plans to make the same types of loans. They have the same management. There's no big adjustment happening in the business. That's the best way to go, I would say. But again, one of these things that's way easier with smaller banks than larger banks. With larger banks, there can be all sorts of weird derivative stuff under the hood that that you don't know
It
about.
doesn't even show up on the balance sheet, really. Right.
Yeah.
We are talking about before the show about like how exposed is JP Morgan Chase really? Like, does anyone really know with all the stuff behind the scenes?
Yeah. Yeah. So look at non-performing loans. Look at net charge-offs as a common kind of metric that people will have as well.
Net charge-offs. Oh, I can't even say that word. Wow. For something like Hingham, you could look back through a period like 2008, or any bank you're looking at. But Hingham I mentioned because they did well during that financial crisis, even with net charge-offs then. So if during their history in a time where the economy's tough, I guess, for banks, if they manage to keep that low, then you know they've got a good history of loans. But then you have to also, like Tom said, I guess, same management has to be in place, same strategy, which with Hingham at least I think is happening. But I think that's the way I would really think about it anyway.
Yeah, I just shared those net charge-offs, Jack, for Hingham. Might be interesting to take a look at. The blue bar is net charge-offs for the industry, and the red, if you can see it, is Hingham.
Oh, wow.
So obviously the spike there is around 2008 and 9.
Yeah, but it's not even close. And if anyone's wondering what those negative net charge-offs are, back in the early 2000s, that's some court cases they won. They got a little bit of cash back, actually, so that's nice to see.
Sharks. Absolutely sharks.
So there you go.
Neat. Well, that's reassuring. All in on Hingham.
Say that, yeah, we're not endorsing Hingham. Like,
Yeah.
it's not a stock recommendation.
Yeah, if you want the negatives on Hingham, do some digging on their deposits, because like we said, they've got like 110% loan to deposits or something. They could certainly get cheaper sources of funding if they had a better deposit base. Phenomenal performance on the loan side. Deposits leave a few things to be desired, I would say.
We got to give our man Jason some light. How do you value banks? PE, book value? We've kind of been talking about some of the multiples. Is there one that you look at first as a general rule?
Do you want to take that first, Frank?
I jumped to PE ratio pretty quickly in comparison to, I guess, a return on equity and a few other measures. But earnings is what matter, just with almost any other company. I don't think it's too much different for banks, and Buffett's one to relay that message over and over and over again. He actually did a interview, I don't know, it was maybe 10 years ago or so, it gets quoted all the time, but he specifically says to value banks on earnings, not on book value. So I'll hand that over to Buffett on that one, I guess.
Yeah, I have a slightly different view. I think Buffett said that you're right, what will matter at the end of the day are earnings, but the way he seemed to be talking about assessing a bank was all about return on assets, kind of like the way we've been looking at it, like a bank that has, I forget the exact numbers he was saying, but it was something to the effect of a bank that has a high return on assets should trade at a higher price to book, and he actually said price to book in that interview. So yeah, there's a few things you could look at. I recently did a bank valuation video and kind of showed some of the things I factor in, but kind of your return will come down to some of the things we laid out with return on assets, how much leverage they use, and therefore what's the return on equity, and then their reinvestment rate as well. So obviously if you if you pay 2 times book, for example, and they earn I guess a 20% return on equity to keep the maths simple, you're only getting a 10% kind of yield as a shareholder because you've paid double the book value. You then have to look at where that capital is allocated. So if it was all paid out to you as a dividend, your return would be approximately 10%. If it was all reinvested in the business at 20% returns on equity and there was no change in book value multiple over time, your return would actually be 20%. And it'll be somewhere in the middle depending on how much they're paying out and whether those factors change moving forward. So there's a few variables to consider there.
And I guess moving just beyond the surface level metrics, I guess you want to look at deposits, how fast they're growing. You could look at a price to deposit type ratio, efficiency ratios, the return on tangible capital employed, things like that as well. So I guess at the surface level, I jump to a PE ratio, but like anything else, it goes far beyond that. And
you mean you can't just look at one number and call it a day?
Well, maybe that's what Buffett's doing with Citigroup, because they're trading at about half the PE ratio or price to book, whichever one you choose, of every other large bank. So maybe that's what Buffett does.
It's actually day trade.
Buffett just screens PE ratio. What's the lowest? Citigroup. There you go.
He finally got a computer. Whoa, screen is everything.
Moody manuals, I mean.
Should get back to Monish.
Can we pull this up on Ticker? This is news to me. I've got nothing. Tom, you heard about this before, right?
Yeah, only what a guy messaged me on Twitter yesterday, so I don't know anything really besides the ticker and roughly what they do. It's some sort of they manage airports in tourist cities in Turkey and some Arabic countries, and they have a couple of airports they manage in Russia apparently, so not sure how that's currently impacting things. But you've got the description right there. Is that roughly what it says?
Yep.
Sweet. There we go.
That's a niche.
Yeah.
This seems like how much competition could this possibly have? I'm not sure on the airport terminal industry, but it seems like it'd be hard to break into once someone's in.
It's another pretty small company for Manish to be investing in. I'm assuming it's only a tiny position for him.
Yeah, has it
they
shown
might have like 600 million in like assets trading at like 50 million. Might be one of those.
Have we got anything in that ownership tab for Monish yet, Jack?
Nothing yet. Well, nothing in the top 10.
Someone
owns 46% of the company, or a corporation.
It's not showing here. The Nuveen pension fund is in it here in the States.
Yeah.
There must
apparently. Oh, sorry, Frank. Apparently, he owns 4.98% as of the filing that came out.
So it'd make him the third largest, but well behind this first one here.
Yeah, interesting. But they're both corporations, it says. Are they like holding companies, maybe? He could be the biggest shareholder.
Does anyone know what the recent change was over the last 12 months? Just looking, if you pull up their revenue, Jack, you'll see what I mean. It just spiked dramatically, I guess. I don't know where that's come from, but...
Yeah, what the... And even last one... Oh, wow, yeah, that's...
Well, that's missing the most recent one, which is the highest at 10.
It's like many, many times that way. Yeah, what happened?
I think it doesn't pull up the last 12 months on the chart, maybe, but...
Or am I... Here, let me make sure it's in dollars. Yeah, it's just... That's inflation. I switched it to dollars, and now it's not.
Okay.
Wow. That's some inflation. Let me tell you what. Sheesh. No,
that's incredible. But margins are all over the place. Like, I don't really know what's going on. There must be some kind of underlying asset or something behind it rather than just a growth story.
Yeah. Has it done okay? Like performance-wise, long term?
Down over
Should
the
we go
last
all
three,
time? How far
fairly
back does
fairly flat, a little bit up over the last year. Quite good this year.
And we're looking in US dollars, so this
Yes,
is
we are.
inflation adjusted, right?
Yeah, quite
was
good
that?
pretty recently.
Did it go right back to 2004 or whenever ticker goes back to 2007? Interesting.
So what about over 10 years, Jack? Yeah, down. Wow. Yeah, that's just too hard basket so quickly for me. I don't know.
It's a weird one. It's definitely a weird one.
Yeah, there's probably, I don't know, maybe there's some special event going on.
I'm sure there's something to it, but that's just the type of company I see, and I'm like, no thanks.
What else
Thank
we
you,
got?
Eunice. Maybe one or two questions, and then call it an episode.
Tom, are you doing? Are you selling puts? James has a question. Have you had any luck finding related options?
No, I still need to figure out tax implications on that one.
Tom wants to be a YOLO options trader, preferably for crypto.
No, I want to go Peterson style, most likely.
Sell them puts.
Sell those high priced puts.
Yep.
Lower that cost basis.
Yeah, be interesting. I'm not sure how that works over here. So,
Have
New
you
Zealand
tried
has some-
interactive brokers or?
Yeah, I'm pretty sure I can get access to them. Probably interactive brokers would be the way to go. I just need to figure out tax stuff. New Zealand has some pretty quirky tax rules around shares. Some very, very good, like capital gains tax and imputation credits on dividends and stuff. Some a little weird, like if we have over $50,000 invested outside of New Zealand and Australia, you effectively can pay unrealized tax on unrealized gains, which is horrific. And there's like a classification as to whether you're considered an investor or a trader, where you have slightly different tax treatments. And I don't want to get into that trader basket. So I'm going to see if options changes that.
Change of topic here quickly. Can we pull up Lewis's comment? Do I say assuming weird? Is that an Aussie thing, or am I missing this? Assuming.
It is like shoe, like on your foot. Like that's.
How do you say the word? Can everyone say this for me?
Assuming.
Yeah, you've got an H in there, I think.
You mean
I
a
definitely
H?
chuck a H in. Assuming.
Yeah, H.
H is the letter in the alphabet, as is Z.
Keen observation there, Louis.
And if it isn't no with an R, it's not no, it's nar. A little bit.
Is that a New Zealand thing as well, or mainly Australia?
Yeah, I think so. Say no.
No.
Nar. Yeah, it's in there. It's a little R.
Okay.
What are weird things
any other
Americans
questions?
say? I think we have more word things than accent things, like gas instead of petrol. Or
yeah, that's literally a liquid. It's gasoline, right? It's short for gasoline. It's got
correct.
Yeah. Okay. It's not that you guys skipped physics or anything.
Correct.
Okay. What else we
We'll
got?
find a good question to wrap up on.
We got who's going to the Punch Card Conference next year. And Jason.
Should we get a meetup going? Yeah, I should put a vote in the Discord or something. How many people would show up to a punch card meeting?
Yeah, we're having it in New Zealand, Jason tells me as well.
Yeah, that'd be easy for you, huh? And Frank.
It's not easy for me.
Yeah, it's not even that easy. It's just but still easier.
We could head to the that jelly company's annual meeting in Sydney.
Let's do that.
Jelly company.
Yeah, we were talking about it before.
What about that milk infant formula
Bubs.
company.
Bubs. Yeah.
Which one?
Yeah, Bubs.
Bubs. I don't know what they're up to.
Cashing out as much stock as possible, like ASAP.
Yeah, I guess.
Liquidating shareholders.
Mm.
While they
Good
go
time
into
to
it,
be earning money in US dollars for them though.
which is weird to think about given all the printing, because it's been worldwide.
Yeah. I think I've said in a video, my portfolio's up 7% just on currency this year.
It's the dollar milkshake. Dollar milkshake
Yeah.
theory.
That's exactly what I was thinking of.
Everyone's got their dollar debt to pay. And everyone's freaking out. They need dollars.
It's that
Yeah, I've
TIP podcast, right? Who is that guest?
Brett
Who talked about the
Johnson.
dollar? Right.
That's his theory.
Yeah.
I like watching all the macro guys. They're kind of intoxicating.
They get a lot of attention.
Yeah.
Yeah.
It always feels like it's helpful, but I mean, it really isn't. At least for a lot of investment decisions.
Yeah.
At least in my opinion. You can think whatever you want. If you're a macro expert, go for it. You can certainly make money if you can identify things early. But it's just so
Certainly.
hard.
Yeah. There's a lot of people that claim to be macro experts.
Yeah.
Especially recently.
Yeah. Especially when inflation is high. Everyone's a macro expert.
Yeah.
All right, should we wrap it up there? Any final thoughts on banks or anything? Anything we should mention before we sign off?
No, I think we if there's no other questions, we should probably crank that music back up just to remind people how exciting the banking industry
let's get
really
energized
is.
again.
And suggestions for topics. If anyone has suggestions for topics upcoming weeks, drop them in chat now.
That'd be great.
Let the music inspire you.
Tom, you still shopping for homes?
I may have some news on that. I'll hold off till next week.
Ooh,
Nice.
fantastic! Like how recent or how soon are we gonna hear? You think?
Next week. Next week's episode.
Next week we'll have some sort of update. All right, looking forward.
I'll give
to
you
it.
guys the gossip behind the scenes, and everyone else will get to tune in next week.
You can just run a solo show if you want. All right. With that said, thank you everyone for tuning in for this fantastic, exciting, thrilling, amazing, energizing episode of talking about banks. It's not too often you can just talk about banks all day, I guess. So it was good to do that. It's good. It's kind of like eating your vegetables, just kind of learning about a very important industry, and maybe there's some good opportunities in it. So, if you got any value out of it, definitely smash that like button. It goes a long way towards helping the channel. Comment and subscribe while you're at it. If you haven't subscribed already, you might as well do it so you don't miss next week's episode. Try to do these at the same time every single week, and we've almost done every single week. We're 60 episodes in, so it's been quite some time together, and it's been fun. So, oh yeah, and please help the channel out by checking out those affiliate links in the description below. That helps a ton. With that said, till next time.